As we've been discussing this morning, there are always lots of changes going on in our industry, and one of the significant aspects of change is in the evolving contributions to our ecosystem being made by next-gen fund managers. And so we've entitled the next panel here, LP Reactions to Next Generation Fund Managers. And to chair this panel is Mark Tannery, who's a very accomplished partner specializing in venture capital at Cooley. Also, he's been working in the venture industry for a long time and is extremely familiar with a lot of the deal trends and the big picture macro trends that are taking place in our industry. So we have a very an extremely well qualified leader of the panel, and with that I'll turn it over to you, Mark, to steer it from there.
Thanks, Dixon. I'll start by having the panel introduce themselves, maybe starting with Anita.
Okay, sure. Is this on? My name's Anita Ng, and I'm a consultant with Cambridge Associates. Cambridge is an independent consulting firm providing investment advisory service to our clients. In terms of client composition by number, approximately 70% of our clients are endowments and foundations, 20% private clients, and the balance are made up of corporations, public and government organizations, etc. I focus on what we term non-marketable alternative assets, or basically the private assets, private investments, and those would include venture capital funds, buyout funds, distress funds, and as well as private funds in real assets.
Georgianne?
I'm Georgianne Perkins. I'm a managing director at Fisher Lynch Capital. We are a 6-year-old fund of funds group. We have about $2 billion under management, and we have programs, 3 separate programs: a venture fund of funds, a buyout fund of funds, and a co-investment program.
Good morning. I'm Malcolm Gepfert. I'm a director of investments with the James Irvine Foundation. Our mission is to expand opportunities for the people of California. I focus on all of our asset classes, and we have been investing in venture capital for 28 years now.
My name is Judith Alcia, and I'm a managing principal of Weathergage Capital. At Weathergage, we're a fund of funds, and we invest in venture capital and growth equity situations, primarily in the U.S., but also a small amount in China.
I'm Jim Tullis from Tullis Dickerson Tullis Health. We are the GP on the panel, and we manage just under $400 million in 4 funds devoted to healthcare. And we had the good fortune to start a new fund in 2009, which happily has a large cash distribution going out to the LPs now, so it's off to a great start, as our prior fund was. So it's a good time for us.
Thank you all. So in preparing for this panel, we were having a discussion about some of the topics that we would cover, and more than once the answers kind of came, well, it depends on what you mean by a next-gen fund manager. And so it led into kind of an interesting discussion describing some of the groups that are now been around a while, but would we have viewed them as a next-gen fund manager at the time they formed their first fund? So I thought I might have a couple of the panelists maybe speak to how they would even describe or define a next-gen fund manager. So maybe, Georgianne, if you want to take a shot at it.
Sure. My definition might be a little different from others. Our program at Fisher Lynch is to build core private markets programs for institutions that don't have the size or staff to do it for themselves. So when we think about an emerging manager, we tend to think about someone who's on fund 2 or 3 as still emerging and not having emerged until maybe fund 4. 10 years or so of experience that can build up the pattern recognition, lessons, knowledge base that it takes to be an established manager.
And do you have to do anything special to find access to opportunities to invest in these groups?
I think access, these days is really not an issue, and in particular for next-gen or emerging managers. But there is a need to be out there and getting to know and being aware of these firms that are coming out, whether it's just through your network or, sometimes we are proactively sought after as well. But yeah, it just I think it takes some effort, and you can either do it on your own. It requires some resources, or work with consultants or fund of funds.
Mark, I would say that some of the early ones that have had success in this area, they came together quite quickly, and they have a very small number of LPs, and the funds are very small themselves, so those two things generally go together, right? So if you were sort of talking to these people at the time they were contemplating putting these funds together, it was over, before it got started for a whole lot of people. And I think that's somewhat still true today. However, there is a bit of a proliferation in these so-called super angel funds and which is the one category of emerging manager, I would say. There's a proliferation of these funds right at the moment, and I think it's the notion of how to find them and how to access them is a bit different than it was when 3 or 4 years ago when this thing sort of got going.
Let's talk a bit about what characteristics of a next-gen fund manager would make them attractive to you as a group that you'd want to invest in. And Georgianne, I think you have certainly been looking at groups for a long time, and what would make a group attractive to you?
I think some of the more emerging managers I've invested with over the 18 or so years I've been in doing venture funds is the entrepreneurial experience and or the operating experience and the angel experience, having taken the capital earned in running a company and then using that to create several more as an angel, and then rolling that into an institutional level fund. That's what you look for. Does it always pan out? That's the ideal, but it doesn't always translate into success as an institutional fund. So the challenge is to find the person that can do both.
Jim, let me ask you, as the GP on the panel, what might you look for either as a younger partner or associate in your firm who might, if you're trying to decide, is this somebody I could see transitioning this business to someday, or maybe fellow VCs that are on a board with you, a younger VC that's relatively new to the business? Are there anything that might stick out to you to say, I think this person might have what it takes?
Well, first of all, I thought the earlier comment that our honoree made about you don't want them all old and you don't want them all young is right on the mark. So we spend a lot of time trying to develop younger people, and amongst those people, we're looking for certain key characteristics. And if someone doesn't have those, it makes it hard to see them be the future manager of the firm, whereas if they do, it's a very exciting thing to think about transitioning the firm into those hands. Characteristics that we're looking for are a personality sufficiently engaging that they're able to bring in deals, have contacts at the highest levels, have relationships that last, all combined with extensive venture capital experience, and I mean at least 10 years of actually being there. My own experience is that it's a tough transition for CEOs to go straight into venture capital, to your earlier part of that question, and it can work, and when it does work, it's wonderful, but it takes a transition period. And so I would be looking, and have looked and have articulated, a younger person who is a transition person to the next generation and will lead the firm going forward, who embodies those characteristics.